I doubt Ira needs any introduction, but of course Kaminak is another story I've followed for years. They just put out a very strong feasibility number. Hopefully Ira maybe mentions something about the new CFO. It's funny, a lot of people ask me about that, and I think the comment I made to most of them was, if you look at the background of the new CFO and you look at where you guys are in the development, I said, I think that's Ira and John sending a message, and the message is we want to cut the ribbon. But I will let you elucidate on that. Ira Thomas, Kaminak Gold.
Thank you very much, Eric. We're very pleased to be participating in this conference today, and it's great to see such a good number of people in the audience. And it's particularly rewarding for us to be back this year, providing with an update on Coffin, which is our flagship development track gold project located in the Yukon. And as Eric mentioned, we have recently completed an 18-month feasibility study, which has demonstrated that this is a very robust, high-margin, open pit heap leach gold project, and I'm going to take you through the results of that right now. I'll draw your attention to the usual forward-looking statements and encourage you to review that at your leisure on our website. And just by way of background and a reminder, Coffin was a Kaminak gold discovery made back in 2010. We've since completed about 280,000 meters of drilling, and we've defined a roughly 5 million ounce resource, of which about 3 million ounces is in the indicated category, and we've got about a further 2 million ounces in the inferred. What's unique about Coffin is that it is a new deposit style for the Yukon. It is a structurally hosted hydrothermal gold system, and it is situated in a part of the territory which has never seen glaciation. So the result of that is that a very large number of ounces in our resource actually qualify as oxide ounces, because we've seen significant meteoric weathering in this part of the Yukon, and that is a big value driver in the economics and what I'm going to talk about. The next slide you're going to look at is a quick animation. It's a couple of minutes, but it gives you a good overview of the project itself. We'll look at our location, our accessibility. We'll look at the topography, the deposits themselves in 3 dimensions, and our latest sort of resource estimate. And then finally, we'll pop back to surface after flying around underground and actually look at how we intend to mine these deposits from open pits. So it goes pretty quick, and I'm just going to kind of give you an overview over top of that. Basically, we're going to fly from 50,000 feet, and you'll notice that we're located about 130 kilometers south of Dawson City. Sizable land package located adjacent to the Yukon River. As part of our feasibility study, we did include the cost to upgrade a largely existing road route from Dawson City, about 214 kilometers. But we do benefit from existing access to the property via a commercial barge route along the Yukon River, as well as an airstrip, and existing 23 kilometers of road that we've developed on the property. We've made a dozen or so discoveries since we started exploring back in 2010, but we're really focused on 4 for our first mining opportunity, and they're enclosed in those 2 circles: Supremo, Latte, Double Double, and Kona. Now we're looking at the mineralization in red, and we're going to fly underground. As I mentioned, this is a structurally hosted gold system. These are variably oriented structures that are all basically connected. We see good continuity, and as we fly from west to east, you can see these deposits are open along strike and to depth. Our current resource is highlighted there on the screen. We've gone to close to 3 million ounces now in the indicated at 1.45 grams. And what you're looking at there is the oxidization, which I'll say more about in a moment, a big value driver. As we pop back to surface now, what you're looking at is the open pits. Mineralization highlighted in red, that represents about 2.1 million ounces. What we like to emphasize is the simplicity of this mine plan. We do not need to build a mill. We do not need to build a tailings facility. Basically, we're digging up the mineralization in red and delivering it to a crusher where we produce 2-inch material, which then gets delivered by truck to a conventional ridge top heap leach facility. That heap leach facility then will be delivering pregnant solution to a standard absorption resorption carbon plant, and will be flying doré off-site. So very, very straightforward, tried and tested conventional technology. The only unique aspect of this mine in relation to other heap leach opportunities elsewhere in the world is that because we are in the Arctic, we will not be stacking this heap leach for 365 days a year. Rather, for about 100 days, we will just simply mine and stockpile. We'll continue to leach and recover gold, but then when the weather warms up, we basically throw all that material that we've stockpiled back onto the heap in the spring, and on an annualized basis, we produce the same amount of gold as if we were located in say, Mexico. What you can see there is a summary of the economics, but I'm just going to flip to the next slide. I think it's a little easier to read. Basically, the assumptions going into this study were a 78-cent Canadian dollar and an 11.50 US gold price. So the study was actually done at a gold price below current gold price spot in Canadian dollars. And you can see that this project generates an after-tax net present value of $455 million, after-tax IRR of 37%, and a payback of around 2 years. If you stress the gold price down to $1,000, we still have a very robust project, and like all gold projects, we're highly leveraged to the price of gold. If it starts to go the other direction, then it really makes a lot of money. We have had a lot of questions about, the sensitivity of our project to the Canadian dollar, and we will be coming out with a more detailed analysis on that. But what I can tell you is that a weakening Canadian dollar really adds a lot of value to this project. We're a relatively low capex project, so although a weakening Canadian dollar does add some capital cost to the project, it's far outweighed by the net present value and the amount of gold that is produced over time. Okay, so moving on, just looking quickly at the production metrics. We're targeting about 46 million tons of mineralization at an average diluted grade of 1.45 grams per ton. This is very high grade for a heap leach project, and in fact, Kaminak will be the second highest grade open pit heap leach gold project when we go into production. Total life of mine gold produced is about 1.862 million ounces, and we're averaging close to 200,000 ounces for the majority of our 10-year mine life. Pre-production capital costs are around $291 million. When you add in about a $26 million contingency, that brings us to about $317 million. This is Canadian dollars. Again, a very affordable price tag given our current capex of around $150 million. This is a project that we think we can move forward ourselves, and we'll talk more about that in a moment. Like Bill's slide, what we're showing here is very low all-in sustaining costs, and we're looking at about $550 an ounce US as defined by the World Gold Council, less corporate G&A. So this is a very high margin project. This is just looking at the mine plan again. I'm going to skip forward, cognizant that Eric's going to yank me here any minute. This is our current resource block model, and really just emphasizing that it is the red oxidized zones that we're targeting for our first 10-year mine life. And the reason is we have very strong heap leach kinetics, and you can see that we're getting gold recoveries up to 90% when we're looking at the 2-inch crush size. And this is another big value driver for this project. How does this project compare to other development stage heap leach projects around the world? As I already mentioned, grade is an important differentiator. On this slide, projects that are better than a gram per ton are highlighted in yellow, and you can see there's very few of them. The other takeaway from this slide is that a lot of these development stage projects are located in places like the western US, Mexico, West Africa, Eastern Europe. Not all of these jurisdictions are easy politically. By contrast, we think the Yukon is a great place to be. Strong and long history of gold mining in the Yukon with strong political support, and we also enjoy good support from our First Nations governments. This is just another slide emphasizing coffee's real value in the kind of the heap leach world. This is looking at 32 open pit heap leach operations and development projects around the world. And in terms of gold yield, so we're combining grade times actual metallurgical recovery, we're second in the world in terms of our gold yield. Looking at the next stages, it is our intention to get this project through permitting as quickly as we can, and we feel that we will be able to basically start construction on this project in the middle of 2018. And our plan is to have first gold in the fourth quarter of 2014. I do want to just quickly emphasize with my last seconds here that we do see Coffee and the feasibility study that we've just produced as our first mining opportunity. This is a brand new gold district. There's significant exploration upside, and that is something that we're going to be turning our minds to here in the coming 2 years as we enter the permitting process. Looking at our share structure, we're very well financed. We're sitting with, we expect to end the year with between 20 and 25 million in the treasury. That's 2015, which is plenty of cash to get us through the lion's share of the permitting process. This is currently looking at our coverage. And I do want to just speak to Eric's comment about Zara. We are extremely pleased to be welcoming Zara into the fold as part of our executive team. She was a key member of the Stornoway team that raised $1 billion for the Renard Diamond Project. And we believe she's got absolutely the right skill set to help us take this project forward. You know, as Bill said, you know, our intention, you know, like Gold Quest, we want to stay away from streams and royalties. We think we can do that. We think it's a very manageable price tag, and with Zara's help, we think we can put together a very traditional form of production financing, some sort of debt and equity package. We won't need it right away. We'll start to turn our minds to that later in the year as we get into the permitting process. So finally, why invest in Kaminak and why invest in Kaminak right now? We think we've got a very unique project, a very high margin project in a safe jurisdiction. We really like the Yukon. We think it's a good place to be building a mine. And we've got significant resource expansion potential here at Coffee, and we've got the right team and enough cash to actually take this project forward and get it to the finish line. Thank you very much.